Okay, if we look at gold, guys and gals, let's go over the setup. What we do this morning, I typed in number 3. We have 3 trade setups. We have a number 1, a number 2, and a number 3. And what we do in an uptrend is here's what we do. There we go. I just typed it out. These are the only 3 trades you need to look at according to my market profile rules. The unique thing about my rules about market profile is I have a direct entry technique. I mean three entry techniques we use on market profile, depending on where the market is at the time of when you log into the trading room. So what we do is when you log in, you're going to look for your moving averages to give you trend direction. Either you're in chop or you are in a trend mode. That's the only 2 things the market can do. We can either trend or we can be in range or chop. We need to know how to trade both markets. So the best thing to do is look at the moving averages. And the best way to trade is from 7:45 until 10:45. So we want to be trading from 7:45 to 10:45. We'll mark that down. So these setups are extremely accurate from 7:45 to 10:45. Just 3 setups, that's it. These are called my first tier trades because they're very, very accurate because they dictate where the order flow is. So we're going to trade from 7:45 to 10:45. What we're going to do in an uptrend, we don't look at the magenta moving average or the pink moving average here. It tells you if the market is angled up. If it's angled up, we are in a uptrend. If the moving average, the white smaller moving average, is crossed in the direction of the magenta trend, you have a trend in that direction. You only want to bias to that side. That's it. So in other words, you just want to take longs. Well, if you look what happened here on gold this morning, we broke out of a number 2 right here at 89. And the thing about it is the symmetry dots lined up perfect at the 89 breakout. So we had an 89 breakout here on earlier, but some of you guys and gals weren't logged in at 7:30. So let's go 7:45. What did I type in the room? Okay, I was typing in the room around 7:50 this morning when the market was at 1393. At 1393, I said number 3 is on deck on crude oil and gold. Why? Why is the market all the way up here at 1393 and I want to buy all the way down here for a number 3 trade? How can you predict that? How can you predict when you're at 1393 and you want to be buying all the way down for 60 ticks below you? Why? Why is that a setup? Because I know I got 3 trading rules on market profile. I know I look at these 2 5-minute charts over here, one to the bottom left, one that has my moving averages on it. And the first one with the moving average is my price profile. It's gonna let me know where I got resistance at with these red dots, 1389, with these green dots for support, 1376. The bottom left chart's also going to let me know where possible resting buy orders or resting sell orders are according to the volume in the market. This is my volume. And it's going to let me know that I got possible resistance at possible support right now at 1384 and possible resistance at 1398. So the trade setups are right in a row. I want to first, if I'm an uptrend, which we were after 7:45, the white moving average is crossed over the magenta. I want to go down through my check down. I always want to ask myself, where's my number 1? Where's my number 2? Because the number 3 doesn't happen unless you break out of HVA or LVA on either one of these 5-minute charts. So you got to check down only 2 trades the whole time when you're trading. Where's my number 1? Where's my number 2? In fact, a lot of traders that are new members in the room, they'll only trade number 1s because they're so accurate. Number 1s are extremely accurate in the room because if you're in an uptrend, you're just buying the green dots on the first test. That's all you're doing with a reversal bar on the 89 tick. So this morning's trade, I said right here at 1393 is typing in number 3 on deck. Why? Because we just broke through HVA, high value area, on a number 2 trade on both of these right here. And then what we do once we break through HVA, the red dots, the only trade setup that we have according to market profile is a retest of the breakout. It's called a number 3 trade. So at 1393, I'm typing in the room. The number 3 is on deck. I'm projecting a buy all the way down here for a number 3 setup. Why? Because that is a retest of the HVA breakout. The market comes down from 1393, and then all of a sudden, I'm getting ready to buy on gold. I got in the room. I said, number 3, get ready to buy on gold. I saw big, giant, long bars when I got on the mic. Big bars, big bars, when you see big bars coming into HVA retest, that tells you that's an exhaustion point. Then I look for what? I look for two important candles. There's actually three I look for a total, but the hammer hardly ever comes up. The two most important candles you look for are a doji, a spinning top. So you look for big giant bars coming in, to show exhaustion on a retest. Then look for a doji spinning top right at the lows. Look at this big giant bar from high to low. Real big long bar coming into my HVA over here, my two red dots. Okay, my red dot over here, I'm sorry. Big red bar, and then look what happens. The bars got skinny. They got small from the highs to the lows. That indicates that the sellers are now off the market. There's more demand coming in the market. And I want to do another check down after I look for a spinning top or doji before a green reversal bar. I want to look straight down. I want to look right to left. Do I have less supply? Supply controls these markets. The less supply you have, the market goes up. The more supply you have, the market goes down. So I want this oscillator below me to show me a higher low. The best divergence you can have is triple divergence. And that's what it did. It did it yesterday too. Divergence. This is triple divergence. This is the best divergence you can have. If you look, we have a higher low as we come into HVA retest. Look at that. That means less supply. That means more demand coming in the market. The market should pop out of here real nice. Now what happens is our entry is the green reversal bar. Let the green bar reversal close. Open it up the next bar. Your maximum stop should be 15 tick hard stop. Your automated dome, and Gerald can help you set this up if you're a new member, should be off on the first 10 ticks. Some of you do 8, that's fine. First 10 ticks, or the first set of symmetry dots. And then I try to find places where the market can go where I have to scale at. I said 1391 would be your first stop, which it did. 1391 because we have roller resistance, no resistance anywhere else on the chart. And our next stop is 1398 on the trade, which would be a 100 tick trade on our subsequent position. This would be a 100 tick move on your runner that's still running if you got a contract left on the position. So you got in right there at the green reversal bar, like I set it up. You guys and gals, number 3 on the deck, I said that's the buy point. It did exactly what I thought it would do. Green bar reversal on my exact area, straight up. Now what you can do, we have the J extension software for your own charts. That produces a Fibonacci confluence dot, a blue dot or a red dot. I use those on HVA and LVA. Your accuracy is very uncanny if you use that on support and resistance. I want to tell you one thing. If you do not know how to trade a 1-2-1, trade 1, trade 2, or trade 3, you cannot use my Fibonacci software, period. You must understand my system first, and then you apply the Fibonacci software to the number 1, number 2, number 3, because that gives you confluence, and that's why I designed the software. I designed the software to be used on market profile, to give me 2 strategies, market profile strategy, which shows me order flow, and then Fibonacci strategy, which shows me confluence of an extension level. Then you get ultimate confluence, and you can see what works. Beautiful setup. All right, Gerald, go to crude oil real quick, and then we'll shut this off. We'll look at crude oil. I set a number 3 on crude oil also. We had a number 2 breakout on crude oil, okay, earlier, down here at the volume nodes at 72. 72 is a breakout right here. That's your number 2 buy breakout. Some of you weren't logged in yet. If you were, you saw a lot of rejections on that area, and there's your number 2 breakout. The area got rejected, and then you had the breakout. So some of you got on this, good job, and some of you asked, why would you break out a number 2 there? Because look at the areas of rejection. Look at the order flow they were taking in before the breakout. Once you get above symmetry dots, guys and gals, when you're in HVA and the moving average just crossed over, this creates an imbalance in orders. Right here, once you get above symmetry dots, it creates the market. Market becomes imbalanced. This is one unique thing that I have that no other market profile trader has. All these traders that show you how they sell market profile, they do not have this, and that's why we have an advantage over all these guys and gals, because we know the exact breakout point when the market becomes imbalanced. at HVA. There's your imbalance right there. There's your breakout. Look how it retests the order flow. Stops are never hit. There's your first target on symmetry dot. Second target, you can bail 75% of your position right there. Then I said to look for a number 3. So right up here at 96.15 after a number 2 breakout is a 2/3 body candle close above. We look for a number 3. And number 3 is what? A retest of HVA. And when we come down to HVA, do we have divergence? No. Check this out. Look at the lower high. What does that mean? That means this number 3 doesn't have any punch. This tells you this oscillator just told me that this buy is going to be very short-lived if it pops up at all. So we want to hold off for lower levels. Okay? Look at the difference between that and gold. Check that out. If you're a gold trader, an oil trader, check out the difference in charts. Do we have less supply on crude oil? Nope. Now check out gold, guys and gals. Look at gold. It just hit 95. Where was the buy? Your fill was just under 88. Look at that number 3 buy setup because of triple divergence. That's how you trade the market. We just had a huge push up. All right, $700 trade just like that on gold. Just like that. Because I knew my second target was 98. I already knew that. Why? Because that's the only resistance I have. Beautiful. Gerald, go back to gold real quick and we'll shut this off. All right. Look at the gold. Look at the gold setup. All right. There's your gold. All right. Look at that setup. Number 3, triple divergence. Look at your oscillator down below. I'm skinny it down. See how we have higher lows? Gerald, go over to gold now. Crude oil. And look at crude. You have lower lows. So this trade right here on a number 3 is a very, very aggressive trade. Okay? That's a big difference. All right? I'm talking about on gold on the number 2. And crude oil, I'm going to tell you why it's a buy. Because you guys and gals have to understand imbalance. If you understand imbalance, you're going to get this. Okay?